In this video, we're going to look at what exactly does cut your losers really mean. Hey traders, warm welcome to you. Thank you for joining me on this video. Right, you've heard this before, right? Every genius out there says, cut your losers, run your winners, cut your losers, run your winners. Probably said the same thing. You've probably said the same thing. You've heard other guys saying the same thing. You read it. But what exactly does it mean when people say cut your losers? Listen, we know that, right? We know you've got to cut your losers. You don't want to be running your losers on and on and on and on and losing 1,000 pips and making 10. It's not going to mathematically make sense, right? Unless you're making 10 many, many more times, but you get the idea. So we understand the concept, but what the heck does it mean? Does it mean you cut it after 1 pip against you, 1,000 pips against you? Where do you cut it? You know you've got to ride a loser out. You can't get it right bang on every single time. So does that make any sense at all? Let's have a look and try and understand exactly what these people mean when they say this thing. Because guys, even the top traders out there, Paul Tudor Jones, etc., say exactly the same thing, but this is what they really mean. And comments in the comment section below, as always, your thoughts on this too, guys. We're all here to learn and improve. Let's look at this example now. Buying at support, common trade strategy comes along, market comes along. We've decided that's a support level. We want to buy at support. Pretty bread and butter stuff, right? Look, we're simplifying it for this example. So comes along, off we go. We are long here. Now, in an ideal world, this thing will just rip up to the sky. We'd be in a full boat position size. We'd cash out and say, thank you very much. We'd go straight down to the Aston Martin dealership. Real world, it doesn't quite work like that, does it? So we assume that we're going to have a stop loss, right? We know, I'm not going to go into the reasons why we have a stop loss, but we've got an assumption that we have a stop loss. Now, where do we put that stop? The idea of a stop is it goes into a position where the thesis of the trade is negated. And that's a really complicated way of saying where the trade is not working anymore. And how do we decide that? So this is where this comes in, because you have to pre-decide and determine where this setup is negated and where it is no longer valid. To me, if it goes 2 pips underneath, it's still valid, right? Maybe 5. Maybe 6, maybe 10, maybe 20, maybe 100, depending on what time frame we're trading on. So this is where you have to make the decision before you take the trade, so that you're not deciding about cutting your losers. You have to say to yourself, hey, this buy at support setup I have, which has a couple of filters, and the trigger is that I buy at the support level, is no longer valid if on a 15-minute chart, daily chart, whatever time frame you're trading on, it goes X number of pips under that support, or X number of ATR, like 0.8 times your ATR, 2 times your ATR, some finite number. That is where you cut your losers. You don't, this area here is your noise area. This is the area that you've predetermined. That's the key to this, guys. You've predefined as an area that you're happy for it to be in, but when it goes below that, your data, your research, whatever it is, you come to that conclusion means that anything below that is I'm out of the deal. I don't want to be the deal in the deal anymore. It's a different type of trade. That is what cut your losers means with that scenario. It's a point where that support is not going to hold. Now, one thing to note is, listen, guys, we know this. A lot of times markets will run just under and they'll just ping around a little bit before they blast off. Support isn't a finite brick wall. Sometimes it is, very often it's not. It's porous. And so cutting your losers, if you take it too extreme, means you come out immediately and you end up getting death by 1,000 cuts, because every time you get it, unless you get it bang on the money, you're losing money. But then at the same time, you don't want it right down here because the support hasn't held. So you've got to have that finite point where you've predetermined it in the setup, in the strategy. That's the level that I'm coming out of the trade. That's the level I'm cutting my loser, because if I do that every time, I know my risk is X and my reward on the trade is X. It's going to be a gap fill. It's going to be new highs or whatever it may be. And so the risk reward ratio works for me. That is cutting my losers. Buying a pullback. Bit harder buying a pullback, I think, in my opinion. We could flip this and say this is the same as selling a breakout, right? Same kind of thing. We would just flip it on its head. And to me, this is an easy way of putting a stop loss in. Right? This is one of the easier things. Support breaks. You have a finite level. Occasionally, you're going to get pinged, but you've got a rough idea where you're going to put it. Same with a breakout. If it comes back and fakes out and comes back in, you know it's not working. Buying a pullback, however, becomes a little bit more challenging because as with all pullbacks, timing thing, I've done loads of videos on this, by the way, guys, so go and check out the channel, have a look through them. They're my favorite strategies, buying pullback flags, that kind of stuff. But not going into detail with it now, but put on the concept of cutting your losers. Here's a valid place to buy, right? We consider that. But how much further? Is that still a valid place to buy? Probably. Is that still a valid place to buy? Possibly, but this is where it gets interesting because to me, this is another trade now. You can split this up into multiple trades. You've got buying a pullback. One is nice, high aggressive pullback here, flag type thing. That's trade number one. Trade number two is this. These are different setups. Trade number three is the deeper counter trend cycle that goes 50% of the move, maybe 61 point, whatever it may be. That's a different strategy to that. And so what you do not want to do when you're buying this pullback strategy, and why a lot of people get caught out on this one, not cutting the losers, because it's still valid pullback, because it's a deeper and you see them often coming back 50% of the move and pushing back up, but not for that trade. You know, that trade needs to be out. If you're taking a number one trade, i.e. a trade that's a high tight pullback, flag, whatever it may be, your stop has got to be pretty tight because your entry might be something like a break of a downtrend line, in which case the stop has got to be here because the momentum, or maybe here, because it's a momentum play and you need that momentum. So cutting your losers means cutting it if it doesn't work straight away, unlike this, which has got a lot more room to breathe. This has got to be out straight away, cut it, cut it. If it comes back, then you're looking at a brand new fresh trade. Number two is a fresh trade. Number three is a fresh trade if it's part of your strategy. What you don't want to do is hold it, hold it, hold it, and it turn into a number three trade, because the stop for a number three trade is a lot wider. It's going to be like this kind of category compared to a number one trade. And if you're in a decent sized clip on that, you're going to be down way more than you need to. So maybe I've overcomplicated this example, but the point is when people say cutting your losers, it means that you've got a predetermined point in that specific setup, whether it's that, or that means that in 9 times out of 10, 8 times out of 10, 7, whatever it may be, the majority of the time, probably a better way of putting it, that trade is no longer going to work. That's what cutting losers means. What you don't want to do is be holding on to stuff, flipping into a different setup, converting it to number two or number three type trade, or holding it thinking, well, this support down here might hold, and changing it. That's when you get into the danger zone, guys. That's when you don't cut your losers. And it's the same if this is a swing trading setup. If you're looking to invest in something, you see the market pulling back, you know, you decide to take it based on this thesis, or you have a broader thesis and say, okay, my losers. The point is having a strategy and a plan, whatever that is, doing it before you take the trade, and then basing it on good judgment rather than just because I don't want to risk more than 2 pips. See, that's just ridiculous. Basing it on market conditions, market judgment, market movement, etc. And then saying, okay, that's what it means by cutting my losers, is that I'm cutting the trades that are no longer working. And I define a trade that's no longer working as this, or as this, or as this, or as this. And that's where your skill comes in as a trader. All right, guys, what exactly does it mean by cutting your losers? Hopefully that's helped. If you like it, thumbs up. If you don't, you know what to do as well. Anyway, appreciate your comments in the comment section below, and also appreciate your support if you're a subscriber. Cheers, guys. Bye-bye.